My name is Mark Selby. I'm Chair and CEO of Canada Nickel, and I'm very glad to have an opportunity to provide an update on the company to Crux investors. We are at a very pivotal point for the company. In just less than 2 years, we've established one of the largest nickel sulphide resources ever. We're aggressively advancing the project. We put out our PEA at the end of May with over $1 billion NPV. And unlike a lot of other companies where the PEA is sort of a downhill place from here, we have a massive amount of upsides from here. And we want to position this company at being at the forefront of what we believe is a third generation of nickel supply. For the first time in nickel's history, it's supply that doesn't come with either a massive SO2 footprint or massive CO2 footprint. Those companies that have led each of those generations of supply have created billions of dollars of shareholder value. And we want these large, low-grade sulfide deposits, which have waste rock and tailings that spontaneously absorb CO2, to be recognized as the new major source of nickel. And we will be doing that over the next 12 to 24 months. And I think a great time for shareholders to get into the story.
Mark, good to have you back. Haven't seen you since what was the end of May, I think it was, with regards to Canada Nickel Corp. One of the best performers of the companies that we followed last year, and one of the best performers on the TSX. Obviously, big question I've got for you is, how do you move from where you are today? You went from 25 to 300, real easy it seems, real quick.
Yeah.
But that problem doesn't go away. The growth story needs to continue. How are you going to do it?
Yeah, so it fundamentally comes down to two key objectives. So one, is in terms of the PEA, again, very happy with a $1.2 billion NPV for the project and mid-teens IRR. But again, because we're aggressively advancing this, we still have a huge number of upsides to bake into the feasibility study. So we're expecting, a much better outcome than where the PEA landed. So it's things like we stopped the resource for the PEA almost a year ago on hole 65. We've now drilled, we're hole 155, and we will have a resource base that's 50 to 100% larger to utilize to come up with the feasibility study. And so we expect that the amount of tons that are going to be included in the feasibility study to be 50 to 100% higher. And it's not just big for big's sake. The big opportunity there is, there's a lot more tons that are higher value and higher grade that we can pull earlier into the mine plan, and all that incremental value drops right to the bottom line. So, that'll have a very, very significant impact on the NPV versus where it's at on the PEA. The second big thing is around the network. Again, most of the other projects that have been out there, were discovered in the 60s and 70s and get work every nickel cycle. This is a new nickel sulfide discovery. Again, we have done just 1 year's worth of network by the time the PEA went out. And so, again, we fundamentally believe that there's, multiple percentage points of improvement in nickel recovery, improvement in iron and chrome recovery. And again, we'll have a path to market that'll unlock the value from the cobalt and PGMs that are there. Every single percent in nickel recovery is literally nearly $100 million of additional NPV. So if we can deliver 2, 3, 4 percentage points in nickel recovery, again, a significant increase in the value of the project. And then with the cobalt and PGMs, with our deals with First Nations, to be able to have utilize their access to capital, which would allow us lower cost capital to build our nickel mine. Again, those will all add to significant value in the NPV. So path one, demonstrably move the needle in terms of what the value of the project is for the feasibility study, and we'll have a whole series of news flow on that over the coming year.
Okay. So let me start. So I want to take all this in, because a lot of moving parts. You're essentially saying the cutoff point where you deliver the PEA you've done double the amount of drilling, well, more than double the amount of drilling, and you've been doing more work on more targets as well. So you expect the feasibility study, which is delivered when?
Yeah, it'll basically, we're targeting a year from now. So
right.
Before we get to the third anniversary of when we started drilling on the deposit, now is what we're targeting to get the feasibility study to the market.
Right, and you'll bring in the kind of cobalt and the PGM component to that too for the feasibility study, which has not been included thus far.
Yeah.
Understood. Okay. What's number two?
Yeah, and then the other really, really important thrust, for the company, and we're going to spend a lot of time talking about this. again, is this next generation of nickel. The issue with nickel, and Elon Musk highlighted this a year ago when he came out with his, please make more environmentally sensitive nickel. And what it really underscored the fact that, again, nickel has had this dirty nickel history. So we've had two generations of supply to date. So the first generation was half a dozen large sulfide projects. Sudbury was the prime example of that. Those were very large sulfide deposits, and they provided, basically, there's one in Australia, one in Russia, one in China, and those provided, the bulk of the nickel, that the market needed up until the early 2000s. And again, each one of those discoveries, there's multiple mines. It wasn't one single project. And again, sort of these clusters of deposits is something that I'm going to come back to. The second generation of nickel supply was NPI in Indonesia, exemplified by Tsingshan, and the fact that, it's gone from, being a very small regional producer in stainless producer in 2005 to being the world's largest nickel producer, the world's largest stainless steel producer, in the span of 15 years. And again, off the back of multiple laterite deposits that are sitting in Indonesia. The environmental problem with both those first two generations of nickel supply was, Sudbury was famous. They used Sudbury to train the astronauts because, basically all of the vegetation for, miles and miles around Sudbury had been wiped out by the, literally millions of tons of SO2, that were dumped into the environment, over that mine life operation. And there's similar things at those different operations, in different places around the world. Laterites come around, you don't have any SO2 with it, but in today's environment, something that's even more damaging is literally tens of millions of CO2 is getting generated to produce the nickel from those deposits. Again, you've got a footprint of 80 to 90 tons of CO2 per ton of nickel versus the 2 tons for us to get to nickel concentrate. We're at the first percentile of the cost curve. So what the market really does not appreciate today, I really think is we have a district scale opportunity. We fundamentally believe we're going to have a cluster of nickel deposits, that there are going to be multiple Crawfords, within this area, and Timmins for the next 100 years, will be as important as, say, Sudbury or Western Australia was to the generations of nickel supply that it represents. And again, this will be the first source of new supply that doesn't have any massive airborne footprint. So because the tailings and waste rock spontaneously absorb CO2, we believe we'll have basically zero carbon nickel, cobalt, and iron, and we'll be able to do it also with almost no SO2 emissions as well. So really a new source of supply for the next generation of nickel.
So new source of supply in a zero carbon manner, which in today's environment is more appealing.
Yes, very much so. Yeah.
Okay. Right. So we're starting to answer the question of how do you go from 300 to wherever you need to be. The scale component. You raised $12 million since we spoke back in July. Yep. We spoke in May. You raised that at the end of July a few weeks ago. What are you doing with that to deliver the scale side of this story?
Yeah. So the key thing. So the first part is obviously that chunk of that is going to be continuing to build out the resource for the feasibility study. But the second piece is this district scale potential. In terms of very simple geology, the reason you only find nickel in a few locations in the world as opposed to scattered in a bunch of locations with copper and zinc is you need to have a giant rip in the earth basically to allow material from the mantle to make it up to the surface. And again, to make a rip in the earth that deep, it doesn't tend to be a pinprick hole. It's a pretty large structure. So that's why, again, in Sudbury, you see multiple deposits. In Western Australia, you see multiple deposits. In Thompson, Manitoba, you see multiple deposits. In Jinchuan and Norilsk, you see multiple nickel deposits in that area. So, we've identified a whole series of targets, and we're working our way through. We've already announced discoveries at Nesbitt, Mahaffey, and McDermott. And we've got a number of other targets that we're looking at, and there's some other things in the region that we're looking at. And so we'll be using that drilling. We're not going to, again, we've already talked about having, 50 to 100% more resource just at Crawford, and that you're pushing towards 40 years mine life. Adding huge amounts of additional tons aren't really going to add value at this point. but clearly demonstrating to the market that, there is the potential for not just one more Crawford, but maybe, 4, 5, 6, 7 Crawfords by the time we're done. Again, in those areas where you find low-grade ultramafics, you do find higher-grade nickel deposits, and there's nothing to suggest, that we may find some higher-grade pods as we continue to drill this thing off. So again, if people think, you're already at the PEA stage, you've already gone up 10x, there's not much upside left here, that's absolutely wrong. If you look at the market cap of each of those leaders of each generation of nickel supply, so Inco and Falconbridge, in that first generation, Inco was a Dow Jones 30 company for most of its life. That's the scale of value then getting created when you unlock a brand new source of supply. Tsingshan today, again, if it was a publicly traded company, if you look at the read through on the nickel mines valuation that's there, again, that would be a company that would be worth, $40-50 billion or more. And that, was done over a 15-year period. When you get a new source of nickel supply and you get it right, and you're the first person and first company to figure it out, there's a massive amount of value runway that's there. And that's what we're really going to spend the next 12 months highlighting to the market, helping the market understand that.
Great story. Sounds great. But your share price has dropped off since we last saw you. It's worth $100 million less. But the nickel price continues to rise. I'm not sure people get nickel.
No, they don't. No. And again, right now, most of the nickel development stories have traded off 25% from their July short-term peaks, and we've traded down along with the group. If you go back, most of the nickel developers are off 50% from where they were in the February highs. We've done better. We're sort of sitting off about 30% from there. But again, if you go back to the early 2000s, each of the nickel booms that's happened and these super cycles that I've talked about, again, if you look in the early 2000s, it was not this linear run all the way up. There was, you had one leg higher in 2002 and then a sell-off in December 2003. And if you panicked and got out there, you just missed, more than tripling your money, not only from the prior high, but, 5 to 6x from the bottom if you bought in December 2003. Same thing happened again in early 2006. And that run over the next 12 months, took nickel prices from the $11,000 ton level where they'd fallen off to at the end of December, and equity values had come off massively in May 2006 to the point where Inco got taken out 18 months later, at more than double or triple the price that it was trading at that point in time. So, and again, I think right this specific moment with this sell-off in the nickel stocks, where you see, where in contrast you see very, very strong nickel fundamentals. Yes, there is noise around the Delta variant, and that's going to have an impact that's there, but EV demand is up over 100%. Year over year. That pace of that's not going to slow. Joe Biden, announced that all 3 big U.S. auto companies are going to be selling 50% of, their cars sales are going to be EVs by 2030. Most of the forecasts from a year ago had global EV sales at 30% of the market. So every forecast that you saw a year ago for nickel demand and EVs and EV thing is literally off, by more than 50%. That's when you get one of these big shifts and you get past the tipping point, those are the kind of numbers that happen. And so again, next year's numbers in terms of demand, analysts were way behind the curve on demand growth this year. They're way behind the curve on demand growth next year. The end of 2021, early 22 is always when I saw, again, this tipping point where EV demand got big enough to really drive the market. It's even way ahead of where my expectations are. And so, again, I think 2022, 2023 are going to be very exciting times. And again, if you don't get into the market now, you'll be kicking yourself that you'll be having to chase the market up, over the next 18 to 24 months.
You're going to tell me I should buy the dip? That was coming next?
Well, there's times to buy a dip, and there's times where, again, that's the part in mining stocks, that if you have some understanding of the fundamental commodities, there's these great trading opportunities where equities are selling off for equity specific reasons, and that have nothing to do with the underlying fundamentals of the commodity. And so, if you can understand when those gaps open, both on the up and on the down, those are the times where you can make really outsized trading gains. And I was, again, I'd say over the last 6 weeks, one of these value opportunities has really opened up in the space.
Another thing happened in the market this week, which I just wonder what the implications are, which is BHP have offloaded their oil and gas assets. What do you read into that? Is that good news for you guys or not?
Oh, it's again massively good news, and it's not BHP. I'll come back to it as an important thing. We've seen a huge amount of corporate activity in the nickel space. Again, I was not expecting that to happen until early 2022. You had Sibanye-Stillwater pick up Eramet's nickel refinery. Sibanye went from zero to being one of the world's largest producers of PGMs in a very short span of time. So again, that's another new entrant in the battery metals market who's very aggressive and has already made the first step. BHP dropped $300 million from Noront about 3 weeks ago, outbidding Andrew Fortescue Group, who again they picked up an option to earn into a property that's owned by Orford Mining. They made a bid for Noront, and BHP came in way over the top. They're paying 4 times more than the share price was 12 months ago. To be able to put their foot on one of the few Canadian sulfide assets. The read through of that $300 million on the recoverable nickel that's contained at Noront is would be $1 billion valuation for us today. But what's so exciting about this BHP announcement is it's a fundamental portfolio shift for that company. And again, there's asset level decisions and there's portfolio level decisions. And again, those happen, once probably every 5 to 10 years in a major company. And so you've seen the largest mining company in the world say, we're getting out of oil and gas. We're exiting sort of these, the sort of past commodities. And we're very clearly saying to the market, we are going to be focused on these future facing metals that they've been talking about now for about a year: copper, potash, and nickel. They're dropping additional $3 billion to get their big Jansen project in Canada into production. And so again, if you look at their moves in nickel, that's only a fraction of that $3 billion. So if they really want to have 3 pillars of a business, they're going to have to spend a lot more money on a lot more nickel assets to be able to get that up to the scale of the copper business. And again, the read through is if BHP is thinking this way, the rest of the mining majors are thinking this way, and then looking in the background, you've got the oil and gas guys who are realizing, geez, we're in the buggy whip business today. And if we're serious about being energy companies, you've seen Shell and BHP talk about that. But the reality is, 95% of their business is still oil and gas. But that shift is happening. I talked to some McKinsey consultants a year ago, March, who operate at those kind of corporate levels. And they made it very clear that, for the first time, those, kind of serious level discussions at oil and gas company about, okay, if we're going to be an energy company, how are we going to play in the space? And, there are multiple of the size of BHP. So, again, the next 12, 18, 24 months, I think is going to be a very, very, very exciting time. And again, this EV transformation, if you can position yourself in the right companies and the right metals at the right point in time in the market, again, I argue the sell-off, creates a pretty nice entry point. It's one of those times where you can really create outsized gains over the next few years.
Those guys are going to want big assets, multi-year, multi-decade projects. And there aren't that many around at the moment. Certainly not in production, not available to them. I mean, what are they going to be looking for? I mean, over and above what I've just said.
No, I mean, again, part of the reason we're focused on really highlighting that district scale potential is, A, it's the right thing to do, and B, we think that is going to be a very important criteria for what these guys want to look for. They do want assets that have multi-decade, multi-expansion, multi-asset, multi-mines within an area type plays. And so, if we're able to clearly demonstrate that Timmins is a very unique asset, and Timmins could have the potential to be the Sudbury for the next 100 years, then I think it's going to create all kinds of value potential. And coming back to your question around, we went from 25 to 300. How do you go from 300 to $3 to $4 billion? And it's being able to really clearly highlight that potential.
I mean, Mark, we've had a few questions sent in with regards to this stainless steel path that you've taken. I mean, given and what you've highlighted to us about the scale of the EV demand coming down the line, is that still the right call?
Yeah. yeah, to be really clear, the stainless steel path was the most technically feasible, highest value path to market that we could put in a PEA and have everybody sign off, including me, that I'm comfortable with the numbers and the value being presented in the PEA. By the time we get to feasibility study, we are not forgetting about the EV market, but what you'll see is like about half the nickel going down an EV path and half the nickel going into the stainless steel path. And there's been a huge amount of news flow around the EV path to market, which kind of gives you some indications of where I think the market's going to be by the time we get to feasibility study. So EcoPro announced, with Blackstone, announced a PEA on their joint venture plant with EcoPro, who's a Korean battery precursor maker. And again, the idea there is you put nickel feed in as concentrate into one end of the plant, and you keep it in the plant until you make a battery precursor. And so again, the scale of what we have, Timmins being so close to the Southern Ontario and northeastern U.S. auto market, is a very, very logical place. So that's, that'll be, one option, that'll likely emerge. The other big option there, and I've talked about it in our nickel discussions, is, 3 or 4 years ago, I talked about the fact that you're going to see the Chinese really start to build lots of capacity to process various nickel materials. And so, in the past few weeks, we've seen the pricing of nickel intermediates, in these cases more from laterite projects than from nickel sulfides. They've moved from, say, 75% of the nickel content paid 3 years ago to into the low 90s% for an intermediate product. And again, we expect that trend to get reinforced and to get broader. So again, companies will be willing to pay for nickel containing feed and really pay up for the nickel content that's there. So again, I think a downstream integrated path makes a lot of sense, makes sense to the Ontario government, makes sense to the federal government, who all have mine to auto plant strategies that they'd like to see happen. But again, I think the market is really catching up to, where I believe the value would get to. And again, that'll make it much easier to drop in specific values in terms of what the market value of our products are. Okay.
And I've got to ask, have you had any of those? Have you had conversations with any of those sorts of groups yet?
Well, we stated in our press release a few weeks ago that we are in discussions with strategic investors. So, and again, the next chunk of capital, we stated very clearly, is, we need in addition to 12, we need some more money to get the feasibility study done. But we want to have the cash to continue on with the permitting activities, because that's going to be another key milestone. But then, have the capacity to really, broaden out and again, highlight this, potential, which we've already, between Nesbitt, McDermott, Mahaffey, indicated that, there is some real interest there. And again, we'll have a whole series of news flow on that, over the coming, 12 months, which I think, investors should pay a lot of attention to. Our biggest challenge is honestly getting assay results. I'm sure you've heard these from other companies, but we had 9-day turnaround when we started drilling this thing less than 2 years ago. And now we're out to 8 to 12 weeks, with, I think, more of the numbers coming closer to 12 weeks coming back rather than the 8 weeks. So, I know some investors are frustrated at the pace of news flow. I can tell you, I'm very frustrated with the pace of news flow as well. And that's why we released some of the results without assays. Visually, we're giving some description of what the level of mineralization there. So, hopefully investors can read into, what the kind of types of assays that might come back. And we'll continue to do that as we move forward and again, continue to unlock that potential over the next year.
Brilliant. Thanks, Mark. Appreciate the update. Let us know how you get on, because obviously the feasibility study is a long way away. We'd love to see a bit more news from you and see you a bit more regularly as you build up the scale of this project. Appreciate your time today. Thanks.
No, thanks you, Matt.